Good morning, good afternoon, good evening, dear students. This is Sir Abil Ahmed from Abil School of Accountancy, your SBR lecturer, Strategic Business Reporting. And this is our first class of SBR. Before starting any topic, first I'm just discussing the paper pattern. And while discussing the paper pattern, dear students, I will explain you people why do I say that SBR is one of the easiest paper to pass. Why? So from the paper pattern you will automatically come to know. Section A. Dear student, in section A we have question number 1 which has 30 marks, and this top 30 marks question comes on consolidation. A very interesting and a very easy topic. Question 2 will give you 20 marks, and this question 2 can come on any IAS, IFRS, even sometime what your examiner does. Sometime in this 20 marks question, examiner can ask in part A from 6 to 8 marks on ethics, and in part B from 14 to 12 marks on any IAS or IFRS. It is up to the examiner. And sometime in part B you can also ask ISB framework as well. But let me tell you one thing. In section A, one thing is for sure, that you are going to face a 30 marks question on consolidation, which means that if your consolidation, if you have a really good grip, really good command on this topic consolidation, and out of 30 if you can manage to get somewhere around 22 to 25 marks, automatically you will be inclined towards passing the paper. Your chances of passing the paper becomes very good if you can perform really good in consolidation. And let me talk about section B. In section B, question 3, question 4 both will have 25 marks. Okay. And obviously these question 3 and 4, they will be on different IASs and IFRSs. Now let me tell you a few things. You will definitely going to face a consolidation question of 30 marks in your SBR. Second, in each SBR paper, your examiner normally asks 6 to 8 marks on ethics. 2 topics. Topic number 3. Almost I can say on every second attempt, if not in every attempt, but almost on every second attempt, you can see examiner normally asks the question, normally sets a question on the topic IASB framework. And sometimes it comes almost in every attempt as well. So it means consolidation number 1, ethics number 2, IASB framework number 3. If ethics can give you, if you can earn 6 marks from ethics, if you can earn around 6 marks from IASB framework, and if you can manage around 25 marks from consolidation, then obviously the rest of the marks you can easily get from the knowledge of IAS and IFRSs. In addition to that, in SBR, what your examiner does, sometimes he sets a question on the topic alternative performance measurement. And even sometimes he asks the question, he has asked the question in past paper, I think many times, on integrated reporting, topic like integrated reporting. And normally in SBR, almost in every attempt you can say, you should be expecting one technical article in SBR, which means that, dear students, if you are good in consolidation, ethics, ISB framework, obviously you have to be really good in IAS and IFRSs, but I'm just telling you how to pass the paper. Consolidation number 1, ethics 2, framework 3, and obviously technical articles. And then after that, all the IASs and IFRSs. What will be my way of teaching? Number 1, whatever I'm going to teach, I'll teach from zero. I normally assume that students, they do not carry any previous knowledge. So this should give you comfort zone that your teacher is going to teach you from scratch, from zero. Second, whenever I'm going to teach you any IAS or IFRS, I'm going to discuss the relevant conceptual framework with that IAS. For example, if I'm discussing IAS 16 property, plant and equipment with you, and if there is any discussion on that property, plant and equipment which is available in conceptual framework, so while studying IAS 16, we will discuss the relevant area of the conceptual framework which relates to IAS 16. We are not going to say, I'm not going to say this, that let us first complete IAS and IFRS and then we are going to discuss conceptual framework. Then there will be no benefit at all. So throughout the syllabus, while discussing IAS and IFRS, I will be discussing conceptual framework as well. Second, recent technical articles, I'm going to cover it inshallah. Third, obviously we'll be discussing a lot on this ethics, how this question comes and how to answer. And definitely, when I'm going to discuss technical articles with you, the technical articles, they actually covered your current issues area. And obviously, I'll be discussing alternative performance measurement with you and so many other things. The detail of the syllabus, I'll be discussing in lecture 3 rather than in first lecture. So in this first lecture, I have given you a little bit idea about the paper pattern. Let me tell you one more thing. In paper of SBR, you should be expecting 80 to 85% paper theoretical. So if your paper is 80 to 85% theoretical, so which means that you have to be really good in theoretical. Obviously, you have to be really good in concepts. Conceptually, you must be very strong, and you should be having a really good command on drafting skill as well. And while discussing IAS and IFRS with you, I will keep telling you which area of the IAS you need to have a really good grip. Okay. When it comes to the material, you need to follow my compile book. If any one of you can just follow my compile book, which will have around 200 plus questions, and I'll be discussing 200 plus questions in my video lectures. So, I strongly believe whoever has done 200 plus questions in SBR, obviously that student then does not deserve to be failed. Obviously that student has to be passed with flying colors, inshallah. So my book will be having 200 plus questions. One more thing, each video will be of around on average 45 marks. The duration of each video will be 45 marks, and each video will have a caption. So obviously caption will give you a really good information that what do we have in the video. So each lecture is going to be of on average 45 minutes. Okay. So let us start IAS 16, property, plant and equipment. Number one, definition. First, actually, we need to discuss what do you mean by property, plant and equipment. Repeat. What are we discussing right now? Let us first discuss what do you mean by property, plant and equipment according to IAS 16. IAS 16 defines plant and equipment as tangible items. First point, tangible items, which means that we are not talking about intangibles. The first point is plant and equipment as tangible items, which means that we are not talking about intangibles. Tangible items that are held for use in the production. Number one. Let's say you have a plant which is being used in the production. Obviously, it is property, plant and equipment, or supply of goods. For example, your organization has got lorries. What do lorries do? They actually take goods from your organization, and obviously through lorries, what do we do? We deliver goods on the premises of customers. So on such lorries, obviously I'm going to apply IAS 16, definitely. Or services, third point. The second is supply of goods, third is services. Obviously, nobody can give you services without using tangible non-current assets. In fact, Sarabil cannot give you his services without using tangible non-current assets. Fourth, rental to others. Rental to others. Now, hold for a second. Now the question is, if we have given a property for rental to others and we are applying IAS 16 on that property, then there is a confusion. The confusion is, then when do we apply IAS 40 investment property? Because in investment property, what happens? In investment property, rental income also comes. And in IAS 16, the rental income is also coming from the properties. Then what is the difference? The student is saying, how do I know? When do I need to apply on the property IAS 40 when I'm getting the rental income, and when I'm supposed to apply IAS 16? Because in both the cases, if I'm getting the rental property, so how to differentiate when to apply IAS 40 and when to apply IAS 16? So let me tell you. For rental to others under IAS 16, the best example of this is, for example, we are talking about actually hotel properties. We are talking about hotel properties. Actually, what happens in hotel properties, we don't only give room on rents. We do give significant ancillary services with rooms. Significant what? Ancillary services. In IAS 16, when property is being given on rent, then it is given on rent with significant ancillary services. The best example to this is hotel property. So hotel properties actually they fall in the scope of IAS 16. It is like property, plant and equipment. It is actually property, plant and equipment. But in IAS 40, investment property. In IAS 40, investment property. When property is given on rent, we do give property on rent, but with insignificant ancillary services. So property in IAS 40 is given on rent with insignificant ancillary services. Obviously, if an organization is having a building and they have given that building on rent, so they will not be, normally they don't provide services like hotel. In hotel properties, what happens? In hotel properties, you will get significant ancillary services, significant. So this is the major difference. That in both the cases, we are getting a rental from the properties, but in IAS 16, we give property on rent with significant ancillary services. You can visualize when you are living in a hotel room as compared to when you're living in a rented house. In IAS 40 investment property, we do get obviously rental income, but we give that property on rent with insignificant ancillary services. Fifth point is for administrative purposes. So when it comes to property, plant and equipment, it is a tangible items. Number one, which is being used in the production or supply of goods or supply of services, or for rental to others, and the last one is for administrative purposes. Simply on your administration offices, we apply IEA 16. Are expected to be used during more than one period. More than one period means more than 1 year. Simply which has a useful life of more than 1 year. When we say more than 1 year, then there is no limit. So according to IEA 16, property, plant and equipment as tangible items that are held for use in the production 1, or supply of goods 3, or supply of services 3, rental to others 4, or for administrative purposes 5, and are expected to use more than one period means more than 1 year. Tangible items have physical substance. Initial recognition. An item of property, plant and equipment should be recognized as an asset when it is probable that asset's future economic benefit will flow to the entity. Simply more than 50% chances are there that organization will get the benefit from that asset. The cost of the asset can be measured reliably. Dear student, you must be able to understand the definition as well as initial recognition criteria, and it is highly advisable to you try to memorize the definition of property, plant and equipment and initial recognition criteria. An item of property, plant and equipment should be recognized as an asset when it is probable means more than 50% chances that future economic benefit will flow to the entity. The cost of the asset can be measured reliably. Now let's see what IFRS what ISB framework says. The conceptual framework. As I did discuss before starting the course, that while discussing IAS and IFRS, we will keep discussing the conceptual framework, obviously relating to that particular IAS. The revised conceptual framework says that elements, just stop. Element means 5 things: asset, liabilities, equity, income and expense, are recognized if recognition results in relevant information. Element means asset, liabilities, equity, income and expense. The revised conceptual framework says that elements are recognized if recognition results in relevant information. So according to the revised conceptual framework, it says elements are recognized if recognition results in a relevant information. A faithful representation of asset or liability resulting from income, expense or equity movement. A faithful representation of assets or liability resulting from income, expense or equity. Okay. The recognition criteria in IAS 16 and most other IFRS and IAS standards differ from the above because they were based on previous versions of conceptual framework and were not updated when conceptual framework was revised. Actually, your asset recognition criteria is not compiled with what framework says, because right now all the IESs and IFRS recognition criteria relating to asset and liabilities, actually it is according to the previous conceptual framework. Now conceptual framework has been revised. So you can say there's a difference what IES says and what conceptual framework says. Now listen carefully. Whenever you come across a situation where IES says something different than conceptual framework, then you will always follow the IES. The conceptual framework does not override the requirement of individual IFRS and IAS standards. The recognition of property, plant and equipment is therefore determined by the reference to the criteria in IAS 16. Property, plant and equipment should initially be measured at cost. Dear student, you should be really good in which IAS we initially recognize by using which model. So in property, plant and equipment initially measure at cost. According to IAS 16, this comprise number 1, the purchase price, Costs that are directly attributable to bringing the asset to necessary location and condition. The estimated cost of dismantling and removing the asset, including any site restoration cost. For example, you have invested in a property, plant and equipment in Pakistan, rupees 100 million, and as soon as you are finished with, you have done with the, as soon as you have done with the development of property, plant and equipment, you heard a good news from the government. And government told you that after the useful life of this asset, you have to restore the area and you have to dismantle the plant. Then obviously whatever cost I'm going to bear on that dismantling and restoration, present value of that cost will be whatever cost in the future I'm going to bear for dismantling and restoration, present value of that provision will be capitalized, because I'm going to incur this cost but not now, in the future. So in that case, what happens? We calculate present value of provision or present value of decommissioning cost, which is capitalized. The estimated cost of dismantling and removing the asset, including any site restoration cost. This might apply where, for example, an entity has to recognize a provision for the cost of decommissioning an oil rig and nuclear power station. Let me give you the example of this thing. For example, we have a property, plant and equipment, rupees 100 million. Useful life 10 years. Okay. We have a property, plant and equipment 100 million. Useful life is 10 million. And one more thing. Let's say government has told your company that after the useful life of this plant, you have to dismantle the plant and restore the area. Let's say dismantling and restoration cost. Let's say dismantling and restoration cost is 12 million. Cost of capital is 8%. Now listen carefully. Logically, this dismantling and restoration cost will not be incurred in day one. First, I'm going to develop this asset, which has a useful life of 10 years. And there's a dismantling and restoration cost of 12 million. And the cost of capital entity is giving him right now is 8%. Now listen carefully. Actually, this 12 million is a future cost, because we are not going to incur dismantling and restoration cost today. So what to do? According to IAS 16, if you have a dismantling and restoration cost, step 1, you have to calculate present value of that dismantling and restoration cost. And we'll see what to do in step 2. Assuming this is the date when we took this, when we built this property, plant and equipment, we have to calculate present value of dismantling cost. Present value of present value of dismantling cost. Dismantling cost is 12 million into 1.08 minus 10. Why minus 10? Because useful life is 10 years. I'm getting 8.82. Obviously 8.82 million. This 8.82 million, let me give you the double entry of this. We will debit property, plant and equipment. We will debit property, plant and equipment for 8.82 million and credit the provision for 8.82. On this credit, we apply IAS 37, and on this debit, we will apply IAS 16. On this credit, we apply IAS 37 provision. In debit comes under IAS 16 property plant and equipment. Okay, now we are not supposed to depreciate 100 million. Now we need to depreciate 100 plus 8.82 million, which means that depreciation expense and useful life is 10 years. 108.8. This coming 10.88. Depreciation expense is coming 10.88. Okay. Now we have to deal with this provision. Actually, first what we did, we calculated the future value, present value. We calculate present value of the future value. Now what we need to do? Basically, after the 10 years, this organization will incur the dismantling cost of 12 million, calculated the present value which is coming 8.82. So this 8.82 will be capitalized under IAS 16 property plant and equipment debit provision is going to be credited. After 1 year, of course, this 8.82 value will increase as slowly and gradually when you go near to the future, your present value will keep increasing. So at the end of the year 1, we have to do unwinding of discount, and that unwinding of discount will increase your provision and it will bring finance cost in your books. Unwinding of discount. Unwinding of discount 8.82 into 1.0. This coming 9.5. 9.525. Unwinding of discount is after unwinding of discount, now we have a provision amount increases from 8.82 to 9.525. What is it? The difference is 0.7056 million. So unwinding of discount actually increases your finance cost and provision. So debit finance cost. Finance cost, debit, provision, credit. So let me repeat. Initially what happens? We calculate present value of dismantling and restoration cost, and then subsequently we do unwinding of discount. By unwinding of discount, your finance cost actually comes in your books, and your finance cost increases as well as provision increases. Now let's go back to IAS. We were over here. Okay. IAS 16 property plant and equipment comprise the purchase price, the costs that are directly attributable to bringing the asset to the necessary location and condition. Third, the estimated cost of dismantling and removing the asset, including any site restoration cost. This might apply when, for example, an entity has to recognize a provision for the cost of the decommissioning an oil rig in a nuclear power station. So simply, as I given you the example, dear students, if you have manufactured a property plant and equipment, and let's say the government says that government wants to at the useful life of this asset, you have to dismantle the plant and restore the area. Then we calculate present value of that. Another technical word is decommission. Simply, we just need to make the entry with the present value of that decommissioning and restoration cost. We need to capitalize that present value of provision and restoration cost. The entry which I've already discussed, property, plant and equipment, will be debited and we credit the provision. So, and obviously the cost that are directly attributable to bringing the asset to necessary location and condition, that will also be capitalized. But dear student, there are some of the costs which you are not supposed to capitalize at all. So you need to understand them and plus try to memorize them as well. IAS 16 says that the following costs should never be capitalized. Administration and general overheads will never be capitalized, because it is not, administration and general overheads will not be capitalized because it is not the result of that property, plant and equipment. Second, abnormal costs, repairs, wastage, idle time. You cannot capitalize abnormal cost because abnormal cost is being incurred due to the negligence of the entity. If a cost is incurred due to the negligence of the entity, so obviously you cannot capitalize. You cannot capitalize such cost because it is incurred because of the negligence of the organization. Third point, costs incurred after the asset is physically ready for use. Your asset is physically ready for use and you are incurring the cost, you will expense out such costs unless these costs increase the economic benefit of the asset brings. If these costs are increasing the economic benefit, it means you can say then this is it. In other words, capital expenditure will be capitalized obviously unless these costs increase the economic benefit. Obviously, if I'm spending, if I incur the cost and that cost increases the economic benefit of the asset, so that cost is actually that expenditure is actually a capital expenditure and we will capitalize it. Fourth, costs incurred in the initial operating period, such as initial operating losses and further costs incurred before a machine is used at its full capacity. Costs incurred in initial operating period will not be capitalized, you have to expense out. Initial operating losses cannot be capitalized and it is very normal. Initially you will face obviously losses, no doubt about it. So let's see what else we are having here. Point number 5. Next point, let us see what it says. Just a minute, dear student. Something is wrong. Okay, now. Cost of opening new facility, introducing a new product, including advertising, promotion, you will expense out obviously. Conducting business in a new location with a new class of customer, training, and these such costs will also be expense out. Cost of relocation, reorganization, entities operation, you have to expense out. As a result of testing, recently purchased or simply the testing cost will be, now there is a you can say amendment in IAS 16. What is the new amendment? The testing cost will be expense out. Previously we used to capitalize. Second, during that testing, if organization has made samples and organization has sold those samples, previously the revenue which we used to generate from those samples previously before the amendments in IAS 16, we used to deduct that revenue from the carrying amount of property, plant and equipment. But after the amendment, the sample which organization has produced and they have sold it, that revenue will directly go to income statement, P&L. As a result of testing, recently purchased or constructed property, plant and equipment, product samples might be produced that are sold. IAS 16 has amended to require proceeds from such sales as well as associated costs to be recognized in the statement of profit or loss. Previously, IAS 16 required these proceeds to be deducted from the carrying amount of the property, plant and equipment. So this is a little bit, you can say, amendments in IAS 16. Methods, measurement methods, models. In IAS 16, initially we measured the property, plant and equipment at cost. Initially we measured the property, plant and equipment at cost. Subsequently, IAS 16 gives you two models. Either you can follow cost model or revaluation model. A very important point, either entity is going to opt cost model or revaluation model, that will be treated as accounting policy of the organization, because accounting policy means where you have choices. Accounting policy means where you have right to choose. So IAS 16 gives you right to choose between two models. Either you can apply cost model or revaluation model, but a very important point is, obviously entity is going to choose any one of them, but if you follow any model out of these two, you have to apply that model, the same model, you have to apply that model on the same class of assets. So same class of assets will have this same model. Now let's talk about conceptual framework. Interestingly, conceptual framework also gives you two measurement bases. One is historical and another is current, such as fair value. If an accounting standard permits a choice of measurement base, such as in the case of IE 16, the conceptual framework notes that the preparers of the financial statement must aim to maximize the relevance. Actually, conceptual framework wants the preparer of financial statement should choose the accounting model which is more relevant, which gives more relevant information. For example, if we have a plant which we are using in the production, which simply means that entity does not have any intention to sell it, and in addition to that, if there are changes in the market prices, normally those changes do not affect significantly the prices of the plant which is being used in the production. So if I have a plant which I'm using in the production, it makes sense to use cost model, because I'm not interested in the revaluation model at all. But when I talk about land and building, obviously if the market values change, then the land and buildings, they respond to it. And you will see a you will see a volatility in the value of land and building. So in case of land and building, if organization follows revaluation model, that is more logical. But a very important point, should entity go for cost model or revaluation model, that's pure depends on their judgment, because IAS given you the IAS 16 gives you the two options, either go for the cost model or revaluation model. But according to the framework, you need to make sure you should follow the model which gives more relevant information to the user of financial statements. To do this, they should consider the characteristics of the asset or a liability, the way in which asset or liability contribute to the future cash flows. Many items of property, plant and equipment, machinery generate cash flows indirectly by being used in the combination with other assets to produce goods for customers. As such, the conceptual framework notes that historical cost is likely to provide the most relevant information. However, some items of property, plant and equipment such as land and buildings are highly sensitive to market factors over time. Particularly when prices rise, the fair value of the land and buildings may materially differ from the purchase price. As such, it may be that measurement based on current value provides more relevant information about the financial position of the reporting entity. Such decisions are judgmental. Preparer must ensure that the qualitative characteristics of useful information are maximized as far as possible. Then we have a cost model, revaluation model. We'll discuss in the next video. Not, but I've given. Let me just conclude my first lecture. I don't want my first lecture to be very lengthy. As I mentioned earlier, each lecture of SBR will be will be of around 45 minutes, and you'll be fine. You'll be I'll be there will be a caption on each video. In addition to that, I have a strong plan of discussing properly 200 plus questions in my videos of SBR. I strongly believe whoever has done 200 plus questions with me, all questions will be of course SBR. If you have done 200 plus questions, so definitely you are not supposed to fail. And another thing, whatever I teach from scratch. As I mentioned earlier, I never assume that a student is carrying any previous knowledge. You're going to follow my compile book strictly, and my compile book is having only you can say near to 600 pages, not more than that. Obviously, if I'm going to teach you around two, I'm going to discuss 200 plus questions. So you, definitely then my book will be having pages as well. Throughout my course, WhatsApp support will be available. You can always ask question on WhatsApp. You're more than welcome. And anything else if you want to ask, I'm giving you my college WhatsApp number, admin number, ASA. Admin WhatsApp number is, this is the code 0092, and after that it is 333 666 214. I personally teach F6, F5, F7, F9, SBR, AFM, ATX. Alhamdulillah. In all of these papers, I have produced, Alhamdulillah, position holders. In F9, I have produced the world position holder. There was a time one of my students took 94 marks in F9. AFM, I have world position along with many nationwide positions. SBR, I have nationwide positions. ATX, I have global positions. In F7, obviously, I have nationwide position, F6 nationwide positions, and in F5, Alhamdulillah, I also have a nationwide position. So it means all of these papers which I am teaching, I have produced position holders. Just telling you this information, the objective is when you are going to join us, when you are going to join ASA, you will be in safe hands. Because I try my best that within the limited time period, I should cover as much as possible that students should not be doing anything else. And to be very honest, if you can just manage to watch my lectures and just hold on my lectures and get a really good command on those lectures, that my lectures are more than enough to pass. You don't need anything else. You don't need anything else at all. Still, you have any question, you are more than welcome to ask on this WhatsApp. If you want to contact me, you can also contact me also. You just ask the admin, they will connect you with me. So I would just say have a nice life, and thank you very much for listening with patience my SBR lecture. And I would say you should join our YouTube channel so that whenever a new video comes, you should get the information. So thank you very much. Have a nice life.